The global stock markets in a down move after a nice second half in March. The beginning of April seems not to be the best for buying. How can we react on this? Let's stick with it and let's have a closer look what the global stocks is giving us for the next few days, weeks, and maybe even months. Yes, we've seen some good price movements in the second half of March. We have seen some big profits, some big gains in many markets around the world. Of course, the US stocks, the indices, especially the Nasdaq, for example, the Dow Jones, the S&P 500, but also the European one, whether it's the FTSE 100, for example, the German DAX, but also the Far East, let's say the Nikkei or the Chinese indices. They all had a good time in the last part of March and recovered after the strong fallback we've seen before. But the last few hours, the last few days have been with a loss. And what can we expect from there? Let's see the different situations in different markets. Most of it is nearly the same, and it's not the worst picture we can expect from it. But let's check it on the chart. In this case, I want to start with you with the Nasdaq 100 future. In this case, you can see this. This is a contract of June, the typical front month of a tradable market here. In this case, of course, you can also see similar price action in any CFD or other contracts wherever you are living and you may like to trade. In this case, we trade the future, and let's have a closer look. This is what we've seen from the second half. The March low here was a really nice turning point and brought the markets to higher levels. And now you can see the last few days, the last 3 days at least, were down. And it looks for some people, oh, this is a strong movement, especially after what we've seen the last few days. What can we expect from here? And typically, after a strong movement to the upside, it is really typical to expect something like a corrective pattern, which may look like an ABC pattern like I've drawn here. Maybe there is some deterioration, there are some different ways of a corrective pattern, but this is some really typical. You can have a closer look at a typical corrective pattern, which is looking like an ABC pattern. But let's think about the overall picture first. What we've seen so far, this might be the point we've seen here early or not early, but in the mid of March, 15th of March, and you could see we had a strong movement to the upside. As long as we've seen this strong movement and we have now an ABC pattern, we may expect some further profits, some further gains here in the stock market, maybe far away. The only question is can we expect here? And even if the market is not moving that far, the minimum I typically expect is after this one. This is the current point. No, that's not right. This is 3 days before. This is where we are currently, maybe. This part here. I will draw this in the chart in the next few minutes. But you can see after this one, an ABC pattern maybe, we can expect something following up to the north side. So I'm not bullish for the next few days, maybe the next few hours after the weekend, but I think we can expect some further gains in the aftermath, especially when the market is crossing some important price levels, which I will show you soon. So this is a really typical one. How can we expect this to come out in the real market? Let's have a closer look here on the daily chart to bring this up. I give you just an idea. This is the first part, the first movement here. And now we can expect something like an ABC pattern. And the question is, where is this point? How far does the market need to go down? And where can we expect the market to turn? For this, we have something like a Fibonacci's. And if you draw this from the lowest point here to the highest point, you will have some retracement levels. I want to warn you, this level is not necessarily a turning point. It's not necessarily something the market is definitely targeting, but this is something many market participants have an eye on. So if you see some of these levels, you normally can expect maybe around there, you can expect that the market is turning. Before I will tell you where the chances are really high, I will mention that typically this strong movement forward is returning back to somewhere inside here. You can easily draw this let's say like a box, something like this. This is a very typical point where this setback is ending. There's also some probability for that. I can show you where you can see this. The second wave compared to the first wave is indicated somewhere around here. So it can be roughly around 38.2%. This is here. This is 30% setback, 40% setback. Around here is the first Fibonacci level. And you can see this is perfectly inside the red, the high probability area. It can be also 50%. It can be also 61.8, but you can see the area on the right-hand side from this level is way smaller. This one is way smaller than this area here. And this probability is not about the highness of this curve. It is more about the area you can get this here. So if you see, it is not super typical that the market is reaching this and even undershooting this level. So this is giving me an idea that I can expect that the market is somewhere coming here. It is even possible that the market is coming a little bit higher and turning before that. You may have realized that even 30% is in the red area. However, if you see that the market is only coming back 30%, you can divide this area in two halves. The first one is left of this one, and you can see this one is even smaller than the right side of this area. So guessing that 30% is enough for a setback is giving you a higher probability that the market needs to fall a little bit more. So that's why I think it is really reasonable to wait for a setback roughly 38.2, maybe 50%, somewhere around this, because from that point on, chances are higher that it is not continuing to lower levels. So that's the reason why I keep this in mind and expecting something like this box. But as a trader, I normally focus on this area here for a setback. But let's stick with these numbers here and with these levels here. Where can we expect that the market is turning? And a single market level like this, like the Fibonacci level, is not turning the market. We should know that the market is not reacting on these levels necessarily. It is reacting on the action, the price action of the market participants. So it's really important to see what they are doing. And some of them are liking these Fibonacci levels very much, but others are not even caring for these Fibonacci levels. So what are they doing? What they are doing, you can see here, for example, from this high here. Some people are thinking, this was an intermediate high. So this is giving me some kind of a resistance in that time. So it will be something like a support in that time. So you can see, okay, we now have two lines here in combination. So some people are willing to check the Fibonacci retracements. They think maybe this might be a good turning point for a price. And some people are saying, no, forget the Fibonacci things. It is more the level here, which we can take into account, which is giving us some kind of support here in this case. So you see they are different approaches, but the more levels you have on a single level, in a single area, the higher is the probability that the market will turn here, because different market participants with different targets, different ideas, different aims in trading find it suitable to change direction or at least to stop their price action, for example, for selling. So this is the first good support level we can see here, but there are others as well. For example, you can check symmetry situation. For example, you may have realized that we have seen several setbacks here on the way down. For example, the latest one was this one here. And if I measure this one from that point, the highest point of this last movement to this point, and combine it here, you can see, wow, this green level is exactly the same level here. This is also supporting this situation. So this is helping me. But what if I said, no, why only this one? I should take care of this area from here, from that point here to that point here. I measure this one and bring it here, and I see, wow, this is absolutely giving me something like a multi-level situation here at that 61.8 level. Maybe you cannot see the numbers, but the red line here is the 61.8 retracement level. And we also have the 100% level here of this setback. And we also can combine this. If you add some numbers, we can not only use the 100%, we can add something like the 61.8 level. And maybe you can see the lines are blinking. Maybe you can see this here. I turn it on and off, so maybe you can see this. So the 61.8 level is also at that point. So whether I'm measuring this one 100%, this is leading me, I'm sorry, I want to take this away here. This is leading me to this point here. But if I see the whole movement here, this is leading me to this level. But 61.8, which is also a typical Fibonacci relation, is leading me to this level here. So you see, we have already a big number of levels which are all turning into the same same point. But if you see, why this one? I would never use this one. Let me check from here to the lowest point. From that point here to the lowest, forgive me, I clicked here. So from the very point here, very highest point here, to the lowest point here. And clicking here, you will see that the 100% level is here, which is also clustering with other Fibonacci levels. But now I can also get at the 61.8. I'm turning it on and off, and you can see this is leading us to this level. And now I'm turning on 38.2, which is also Fibonacci level, and expect something to blink here. You see, maybe you cannot see this. It is easier to see here. I will do it again and again so you can see this. So there's another one. So even if you're not knowing, I don't know, which one shall I use here? We have so many levels which are indicating that we have something like a rock solid support level here. I would think that in case, which is not clear now, but in case the market is reaching 14,400, there are many supportive levels at that around this area, which may give the market support for turning. And now that's exactly what we were talking about before. We are expecting that the market is coming down, and if not knowing where to, the shape should be something like an ABC pattern, and reaching some of these cluster levels would be really typical. So please be careful. This is not indicating that the market needs necessarily reach this level. But vice versa, in case the market does, is this a rock solid support level, which not necessarily mean that the market definitely will turn around and gain to higher grounds. But here, the market participants are contested. What are they doing? So let me check this level here again when the market is reaching here, whether we turn or not. So if you're now thinking about a positioning on the short side, which we can think of in a few minutes on a lower time frame, then it is quite interesting to see what the market is doing here. So if you're not clear and if you're not 100% sure the market will break this level, you should at least maybe take profit, or at least some profit at that point. Or at least when reaching this point with your short position, you can or should trail your stop a little bit more tighter, because the chances that the market is turning around these levels is higher than not respecting this one. So please don't get me wrong. This is not a rock solid proof that the market definitely will turn here, but this is a rock solid proof that many market participants will have a close look what they are doing here. And normally, when they do this, they stop their price action. So if they have been short, they take profit. If they wanted to buy, they wait at that point until the market is reaching that point. So this is giving the strength of these supportive indications here. We are missing some additional levels which we cannot draw right now, because for that we need the length of the first part and the length of the counterpart. Then we can estimate this one, for example, again, will also give me maybe some clustering, but we don't have the length of the first part because it may continue. This is not a promise that this will happen, but if we see this pattern, we can easily see this, we can easily understand this pattern, which is giving us a really good idea what the market currently is doing. So this is a perfect lesson in Fibonacci and Fibonacci clustering. So if you want to see more about this, maybe you want to maybe subscribe this channel so you can see many more examples in the future where I will describe how to do this in different markets as well. So this would be a really typical thing here, a really typical pattern. And in a continuing short situation. We can have other measurements to see where these levels will find more and more support levels here on this part. But currently, it is quite smart to have an eye on this level, 14,400, what the market is doing here. It can, of course, be that the market will do a one mover here, coming back a little bit, and have a continued one to this level. This is absolutely typical. The other option might be something like, no, we are stopping this one and going up here and then continue here to the lowest level, and then we will continue to the upside. So currently we are in the bear market, and it is expected that the market at least is reaching this level. I think the chances for that are very high, but we want to confirm this while checking this price action we will see here. For a bullish setup, which I expect after something like this, and something like an ABC pattern like this, I would expect something like a continuation to the upside. And even if the market is doing some other pattern, maybe it looks like this, which is also quite typical. It's the same pattern, it's just a bigger scale, and a continuation like this. As long as the market is staying roughly in this area, everything is safe. Going below this area, I wonder a little bit what this is, what this will be. But going below the 78.6 level is killing my bullish fantasy. That's the reason, or the reason for that is that the probability for this case, you can see 80% is here, and you can see there's only a very small probability. That's the rest of this area here, that this is a typical zigzag situation, which is needed for a turnaround. So if this is not a zigzag, chances are high when breaking this level, the market is completely in a different situation and will continue to even lower points. So it is not very smart to just think it's 100% sure that the market is doing that, but the best is currently to estimate that the market is doing, like I've drawn before, an ABC pattern, maybe only to this pattern or inside this box here. Is really smart. So that's the reason why I don't need any markets below this 78.6. So I can delete all of this one. I can tidy up the chart a little bit. So to have only that in mind, what is really important for me, and my premium support levels are 14,400. And the other one is a little bit between 30,800 and 900, maybe just in the middle of this, which is giving me also an indication. And we will have more clearness about this, seeing this pattern, what we see here, what we will see here in the next few days. The good thing is, if you like the FTSE 100, for example, you can see roughly the same. So I will not draw this for all these markets, but you can see that's what we've seen with the FTSE 100. I just give you a chance to see, I see, and this is the box. Maybe you can find out whether you can see some kind of pattern of cluster patterns here as well. But even if you're not able to, expect, in case the market is doing some ABC pattern, that we have a good chance that from that point we can enter a long position, or to have something like a feedback, something like a confirmation when the market is breaking through these levels here, and buying from that, thinking of a continuation to the upper market here as well. So you see, this is not only a thing in the US market, this is also here for the FTSE 100, for example. This is not the FTSE 100. I took this. This is the FSMI. This is the Swiss market index. In this case, also the future. I was just wondering why this is the in Swiss franc. Here, you can see this is the Swiss market, but this is the same situation. That's a good one. And you can see we have in the overall picture roughly the same situation with these clusters we've drawn before. We were talking about this in some previous videos, but you can see the situation, the story behind that is roughly the same. So what is working in the big picture may work in a smaller picture as well. But talking about the FTSE 100, let's check the British market as well. And you can see also here, we have seen some strong movements to the upside. And this is also giving me an idea that in case the market is coming down in something like this, currently we don't see this so well, but if you see that the market is doing something like this, we can hopefully expect that the market is coming down in a corrective pattern, continuing the same way like we've drawn with a Swiss market index or the Nasdaq, what we've seen before. Let's have a look at the German DAX, for example. In this case, I already pre-drew this, so you can see exactly the same situation: a strong movement to the upside, an ABC pattern to the downside, and a continuation to the upside. Maybe you may have in mind, didn't you tell us the 8,000 is a good chance with the DAX? Yes, and I still believe it is, but not now. How can I think of selling the market in case the market is moving strongly in the upper direction? So always wait for a confirmation in the counter movement. So we were talking about the 8,000 situation as the market was something looking like this. And of course, in case the market is doing something like this, moving into the 38.50 or 61.8 in a corrective pattern, it would absolutely be the best chance to expect that the market will continue to lower levels. So before entering a short, of course, you always need the counter movement. I never suggest to buy at the highest point or to sell at the lowest point. It does not make sense. Wait for a counter movement. And the counter movement, as long as the counter movement is an ABC pattern, which is a typical corrective way to move, or something like a back forth with many overlappings, you can estimate when this is broken that the market will continue here into this direction. If the market would have broken this or this level, that the market will continue here to the lower level. But we never get this. Or we never got this in this case here. You can see it was not an ABC pattern. It was not back and forth. So the 8,000 idea may be still in charge, but not now. It does not make sense to sell short when the market is moving strong to the upside. And it does not make sense either to sell at the lowest point. And even at that point in the past, it was not really smart to do so. If you want to sell short after this movement in this corrective pattern to the upside. But this is a different story. I don't want to dig too deep here. I just want to give you the idea that currently the market is, in the latest movement, strong to the upside. So as long as the market is moving in an ABC pattern, or alternatively in something like a corrective pattern here, you may expect most probably a continuation to the upside, which is leading us to higher ground. So maybe even higher levels like ever before, so new all-time highs. And after that, maybe we can think about the 8,000 level or whatever. But currently, this is out of the from the table, from the desk. This is nothing we should think about. Only if the market is not giving us now this one or giving us this one. If the market is instead is giving us this one, I would never buy. And I would not have any breaking level here or there, the latest intermediate high, to break, because we don't have this one. So if this is impulsive to the downside, this is breaking my bullish idea, at least for a while. So always keep in mind, if you want to enter a position, always go, which is the strong movement. This is giving me the direction. Wait for the weak movement, the corrective pattern, giving you a better price confirmation, the price action confirmation, and a better price level to enter a market. So this is something we can expect. The raw idea in all the drawings might be a little bit similar to what you've seen with the Nasdaq. Let's see what the S&P is giving us, and the idea is roughly the same. So also here, roughly the same situation, but let's have a closer look in this case. I don't want to draw all the pattern again and again. Currently, I want to switch here to that very part here. You can see, we did not see this with the FTSE 100, but you can see it a little bit in the Nasdaq, even a little bit better with the S&P 500. Check this movement here, the 15-minute chart. What we've seen here the last 3 days was the first movement to the downside, an ABC pattern, which is always indicating the wrong direction, an ABC pattern into the upper movement, The next one was a strong movement to the downside, and also shaky or ABC, whatever you prefer to say or to name this one here, and another strong movement to the downside. Do you remember this pattern? Let's check it out. It looks a little bit like 1, 2, 3, 4, 5. Again, 1, 2, 3, 4, 5, without overlapping. This low here and this is not overlapping. This is indicating us this seems to be an impulsive move, or an impulse in this case, because no overlapping is giving us this is an impulse. The main trend situation, the best you can have if you want to have a strong movement. So if you have something like this, in case you now get something like an ABC pattern, expect a continuation in the same way again. Let's think about this one. Maybe if we have here, I now switch to the 4-hourly chart. You can see this part here is what you see here. Maybe this, what we've seen here, the 5-wave move here, maybe we get something like an ABC pattern. When breaking through this level, we may expect something similar to what we've seen here before when breaking this level again. And the funny part now is, isn't this quite exactly what we're expecting with Nasdaq, with FTSE, with DAX, that the market is giving us a pattern something like this, leading us into this box here in the next few, let's say, days? I think we have a really nice chance that this is happening. However, I want to stress, I don't want to forget that it does not necessarily need to become like this. However, if you see this ABC pattern, if you see that the market is counter moving like this, this part here, you may expect the similar situation like this. So for the very short-term traders, they may expect a strong movement to the upside, some counter movement, and another movement to the upside. Let's have a closer look in the 5 or 15-minute chart. After this one, we would expect something like an ABC pattern to the upside. ABC to the upside, ABC to the upside, ABC. This means the first one is a strong movement and a weak to the upside, through the downside. That's exactly what the market is giving us currently. You now have something strong here, which may continue a little bit longer. I don't know. I'm not telling you this is ending here or ending here. I don't know that. And I'm not interested in this information currently. However, whenever this ends, maybe after the weekend, we can expect, in case the market is giving us a back and forth or ABC pattern here, we can expect the similar situation like this. And we can see this here is more or less that here. So you can see this, it's exactly the whole pattern all over again. You can see this is the first move, corrective counter move, and this one. Altogether, this is giving us an ABC pattern. Breaking through this level is giving us an ABC pattern to this one. Bringing this together, this is an first move, an ABC. Breaking this level, this is a continuation to the upside. So many people are asking me, what is your idea? Are you bullish or bearish on the markets? Yep. Yeah, what? You have to decide. To be honest, no, because the market is giving me both opportunities in different time frames, in many patterns. So you can see, I definitely want to buy the market here in case we get this one, this corrective pattern here, for a short while, expecting that the market needs to turn. Where will it turn? Most probably, you can draw Fibonacci retracements, and you see, typically it should end somewhere in the box and in an ABC-shaped pattern, for example. So you can see, whatever we've drawn, it is always roughly the same situation. Unfortunately, I have to warn you, it is not in 100% of all situations exactly what I've drawn here. It can be in a different way, and sometimes even me, I'm doing this for more than 20 years now with Elliott waves. I'm a trader since 30 years now. And since 20 years, I'm doing Elliott waves, or more than 20 years. But to be honest, in many cases, I don't see this. However, if I don't see this pattern, I don't do anything. Because if I don't have the clearness of the situation, I'm just staying at the sideline, waiting for the next clear picture again. However, in the different markets, we've seen now so many nice ideas. Also here, Dow Jones future, for example, the mini Dow future. You can see this one. If you're a short-term trader, you can expect maybe after the weekend something like this and a continuation, which is giving us an idea, after this strong movement to the downside, we can expect that the market is continuing when breaking this one. So this might be a long opportunity, this might be a short opportunity, and after a setback like we've drawn before, maybe a continuation to the upside. So it is always fitting into the next bigger picture. And if it is not fitting, what would you do? Standing at the sideline, waiting for the next good opportunity where the picture seems to be clear. The good thing is this is working on so many charts, especially currently, that if you find out, in Dow Jones, I don't like the picture, I cannot clearly see it, it is looking a little bit weird here, go with the Nasdaq. If you don't like the Nasdaq, for example, you can do the Nikkei 225, for example, where you can see that on the daily base, we have seen a strong movement to the upside. So from that point here, which, by the way, was starting from the 38.2% level, which is also a Fibonacci level, and here my roughly drawn box, the market reached this one in this corrective pattern and turned around, which should not be a big surprise, to be honest, and should turn out the market to the long side. And the market turned to the long side. And now we have the next opportunity when the market, or in case the market, is coming here into this box, and really important, I don't want to fall it like this. Sometimes this happens. But the good thing is I don't have any point to enter, no trigger. I need something like a back and forth, then I have a trigger. If the market is just plunging, then I don't have a trigger. We had something like this situation here. This was a strong movement, and I was expecting to go long in case the market is, okay, it did not. Okay, no long position. So you can see, of course, the market can completely be different what I expected or wished for. The good thing is, this is not leading me into a trade. So it is not giving me the indication that I can buy this market. And being in a bullish situation when the market was at that point, and maybe at that point where I expected, when turning now, that's good. I could see the last strong movement was this one, and it turned out this is a corrective pattern with overlapping counter movements, leading us to a continuation to lower points, or a three-wave pattern, which is leading us to lower points. So you can see this is a typical, if you can understand these price movements, you have always a raw idea whether to go long or short. And the latest strong movement was this one. So the Nikkei 225 is not different from what we've seen before from the European or American stock markets. So you can see, in case the next few days the market is falling into this area in an ABC pattern, you have an idea when breaking these intermediate highs, this one for example. So please don't remind this level here, because I don't know the pattern now. It can be also something like this. It can look like such a pattern, which is also corrective. So this would be the entry point. So please don't keep in mind, it's exactly at that mark or at that level. It depends very much what the pattern is looking like. But I think normally you could clearly decide whether this is corrective or impulsive. And keep in mind, if it's corrective like this, but not reaching this area, this might be corrective and indicating a break is leading us to higher grounds. I can clearly understand this. But this is not meaning that this is a complete correction of this movement. So if the market is doing like this, I would expect first, second, third, fourth, fifth wave. And after this, one and another here. So an ABC pattern to the downside. So even if the market is continuing from here, this is a small setback. I would expect that the market is continuing in a small way, maybe the same like you've seen here before. and then we will have this ABC pattern. So please be patient, wait for the real size setback. I've drawn this now several times, and you can see also here you have maybe some support from previous support levels here. As soon as you have something like a cluster, a multi-level turnaround point here, then the chances are very high that this is used by all the market participants for a turning point. It's not a promise, but as I've mentioned before, the chances for that are very high. So I hope this is helping you a little bit for your own trading decisions. I know it's a little bit difficult, but in this case it was nice to talk about the Fibonacci clusters and all the Elliott behavior. I hope this is helping you with your own trading ideas, with your learning about the Elliots and the Fibonaccis maybe, and also is giving you an impression what the market may do in the next few days or even weeks. So let's expect something like we've drawn before, but always check back whether the market is exactly doing this price pattern or giving us an alternatively price movement. Let's say a strong where you wait for a corrective pattern, or a corrective pattern where you maybe expect some strong movements. Then you know, no, this is wrong at that very point. I wait for the next clear pattern situation. So crossing my fingers for your own trading success. Have a good time. Seeing you soon. Please subscribe if you like what you've seen. Ask some questions. I want to answer them. Ask some questions in the comments below if you like, and thumbs up if you like it. It would be always appreciated. So have a good time. Bye bye.